Good morning, everybody. Welcome back to the Schwab YouTube coaching channel for the Wednesday edition of Trader Talk in today's market. I'm your host, Kevin Horner. Pleased to be joined by my friend, fellow Schwab coach, Brent Moores this morning. Good morning, Brent. How you doing today?
Hey, I'm doing great, Kevin. Good to be on with you. And it's NVIDIA Day. I'm excited to talk about that and look at the markets here.
Yes, it is NVIDIA Day. We actually are going to be hearing from a pretty important company as it relates to more than a couple, at least two of our biggest indices, right? But we also are going to hear from some software companies this afternoon as well, and Salesforce and Snowflake. And I feel like maybe given what we've seen from software of late, those two might be equally important companies to hear from today.
Yeah, certainly software has been really the story, more so than, we always talk about IT or whatever. Software over the past few weeks and its underperformance has been huge. We'll see if things can change with earnings here today.
Yeah, that's true. So we'll talk a little bit about all of that with all of you. We are pleased to also be joined by fellow coach Barb Armstrong in the chat. Please say hey to Barb there. She'll keep an eye on comments and questions for Brent and me. Of course, we'll do the same, though. We want to try to answer what we can on the fly as we work through our discussion. You can feel free posting in there for the duration of our show. We'll go about 45 minutes in total with you today. Make sure you're following the three of us on X. Barb Armstrong, CS, Kevin Horner, CS, and Brent Moores, CS. The easiest and best way that you can find us when we aren't hosting classes for you here. So meet us on X. All right, with that, let's jump to our disclosures. We'll remind you our conversation here is only informational and educational. We do not make recommendations nor endorsements for any specific approach to trading the market. We will discuss technical analysis, though. We utilize technical analysis to evaluate the areas of the market. And so when you're thinking about technical analysis, we want to remind you not to consider it the sole means of your decisioning on your trades, meaning don't rely only on technical analysis. You can incorporate it. We think it can be a helpful piece, of course, but we discourage you from basing decisions only by what you get in the way of technical analysis. Now, today, being a standard session, we will be working through our top-down approach to the market. So we're going to hit up the S&P 500, the NASDAQ 100, and the Russell 2000. We'll expand a little bit in some important industry groups, semiconductors, maybe take a look at the transports and see how they're holding up as they've pulled back a little bit after rallying to new highs. And then, of course, sector relationship, try to get a clearer picture for where we have leadership and laggers. And if you're here often, well, you know those groups because we try to bring those up here frequently. We try to remind you, if we're trading the trend, it's commonly thought that we go with the securities in the sectors that are already in trending situations. So with that, let's take a look at the S&P 500 as we kick things off here, Brent. Hey, look at this. This is a development all of a sudden. That candle today, that's above both the 20 and the 50 for the first time in about a week and a half.
That is, yeah. So, nice boost today. And, less we thought, hey, this nice trend we had, which has kind of rolled over and gotten a little more flat, meant we were rolling over straight into a downtrend. Maybe not so fast here. We're above the 20, we're above the 50. And now there's still a lot of overhead resistance if we break up above, if we keep on going up. So that this isn't necessarily a trend changer necessarily, but it is a little bit stronger. Another thing I would point out on this is if you look at the RSI at the bottom of the chart and you look at the highs on that RSI, what they have done, they've just kind of consistently gone lower as we've gone. That's just showing a gradual weakening. Well, it just showed what happened to that trend. The overall trend just kind of evaporated to the point that right now seems like we're just kind of in a sideways channel. But within that channel, we'll see which way we break out first, the high side or the low side. But today, so far, so good in terms of getting us towards the upper portion of that channel, I guess.
Well, Brent, speaking to the RSI, yes, we have a down slope. Yes, we have lower highs. But at the same time, price hasn't changed, right? We haven't gotten a breakdown in the trend. What we've seen is consolidation, basically going back to mid-November. So we've had all of, that November to December, December to January, January to February, 3.5 months now, basically in consolidation. Brent, could the RSI have basically speak to just that consolidation rather than breakdown?
Absolutely. You probably said it better than I did, Kevin, but that's what I intended to say is this does not mean that the trend is broken. It just means that, it doesn't mean that we've switched into reverted from an uptrend to a downtrend. It just means that, hey, that nice uptrend that we had has weakened to more of this sideways pattern. And of course, we don't know where it's going to go from here, but maybe it is just kind of this big time to catch your breath, and then that upward trend may just resume. But for a lot of traders, I think what they'd say is, until we break out of the channel, we're just going to kind of assume maybe that we're just in this consolidation period. So we need the break. I think for a lot of traders, they'd say we need the break, the confirmation of breaking out of that consolidation before we're ready to say, gung-ho, full speed ahead in terms of the upward trend.
So maybe a little bit like what we've kind of talked about really for the better part of the last 3 months, which is maybe you're the trader who likes the sideways and you like to buy near support and sell near resistance. That's fine. That's been working for the majority of this last 3 months. Your opportunities to sell at 7,000 have been clear. By the same token, your opportunities to expose money to the SPX around 67.80 up to 6,800 are also pretty clear. The question becomes whether that continues. And so the thought here is perhaps that new money coming in might just be waiting for a little bit of a signal, right? Breakout above 7,000, break down below 67.75, and then that'll give us a little bit of directional concept going forward. Is that right?
Yeah, absolutely. Now, in the chat, Zinc said, hey, what about breaking about those sideways trending moving averages? Is that significant? That is a good question, because I'd say yes and no. Yes, it is significant, because anytime we're breaking moving averages, there's something to it. However, moving averages in terms of in terms of resistance and using them for resistance or using them for support become less significant probably when they're going sideways. Because when they're going sideways, look at the stock or the index in this case. We go above them, we go below them, we go above them, and the history just kind of shows you, well, it's not that just because we crossed below both of them a couple of weeks ago doesn't mean everything just went to pot there. And just because we broke above them doesn't mean everything's going to be awesome here on this. So I don't want to say it's insignificant, but probably less significant and less likely to act as support or resistance when they are going sideways. I don't know. Your thoughts on that, Kevin?
And it's pretty much the same, to be honest. And when we get these flattening of the moving averages, and not just that, Brent, we get the price action above it, below it, above it, below it. We're not getting any real delineation of short-term trend. That's all validating this sideways motion. And so, this is one of those instances where, traders who were trading from lows in April all the way through mid-November, we're thinking, well, it's going to be more of the same. We buy at the supporting trend line, the 50-day moving average or the 20-day moving average, and then things just continue. Well, many traders are probably kind of trapped in this zone because they've been waiting for that continuation and we just haven't gotten it. So I'm sure there are investors who stepped in over the last 3 months and are wondering, boy, did I expose at a high level? Should I have been patient? We're going to have to wait and see, obviously. Hopefully today's earnings opportunities will have a little bit of impact on that, right?
Yes. One last thing on the SPX here. Just because the SPX is going sideways, it doesn't mean everything in the market is going sideways. We've seen this huge rotation. We'll probably talk about it a little bit more, but some portions of the SPX are doing great right now, and some portions are doing poorly right now. And but those areas that are doing well are are different than the ones that were doing well 6 months ago, and vice versa. And so, sideways market doesn't mean no opportunities for traders. It just means, though, when we look at the whole market, it's not pushing up. But it actually may not be a terrible thing for some of these sectors that really weren't doing as well before. They're kind of, every dog has his day, so to speak. I guess, we're seeing some sectors that are doing well, which is good. Nice to see them do well.
Yeah, and I know that we've talked about this a lot in this class in particular, but I always like to address it, just make sure that our viewers who are maybe new here are going to get a nugget or two every conversation, and that's just the reminder of the size of these groups. Just make note mentally here, year-to-date leadership, energy, materials, staples, industrials, utilities, real estate. There's your top half. And if we did it visually with the S&P 500, Brent, let's see, we've got real estate, materials, utilities, energy, staples, and industrials. Look at how small those components are relative to that infotech, that communications, that discretionary and financials in the upper right. So the reason I bring this up is that if we can get technology back in gear, Brent, we do have a legitimate opportunity to kick through 7,000 on the SPX. I'm moving into the NDX here now, Brent, because we can clearly see the difference in these two. The consolidation's been a little bit wider, more volatility here. But we've been, prior to today, below both of those 20 and 50-day moving averages. It just feels like this has been a little bit more of a negative connotation with tech, right? That nice little uptrend we were trying to maintain, we've been below it now for basically the month of February. And the reminder as it relates to the NASDAQ is, it is not exclusive that all tech stinks, as we talked, Brent. From a trend standpoint, software been negative and bearish recently due to release of Anthropic detail. And then if we look at semiconductors, we've had bullishness, semis trading at highs. So I imagine, Brent, we're probably watching something similar here. Can we get back above that 50-day moving average? Even though it's flattening out a little bit, it's about the midpoint of the range we've been in since September in the NASDAQ. And that's also kind of an interesting spot for a sideways trend.
Yeah, and just a reminder to everybody, tech is about 60% of the NASDAQ. It's about a third of the S&P 500. So still big overweighting in that S&P 500, but not nearly as much as the NASDAQ, which, is probably explained kind of partially why you're seeing what we're seeing here and what you just explained there, Kevin, on this. But, the same thing holds. That's why today's a big day, is because, when you think of earnings season, this is kind of this is the biggest last company that is this round of earnings is NVIDIA. But as you mentioned, a couple software companies, Snowflake and CRM, are releasing today too. So can that possibly be a change in the, an omen of change here, I guess, if you will, in the market, if they come out with good results? I don't know the answer to that, what they're going to do, but that's why this is kind of a big earnings report today.
Yep, exactly that. If we can get that one ever important group to participate, then we could see the S&P and the NASDAQ both making significant moves. Let's see how our small caps are doing. The Russell here, a little bit more like a flat maneuver today. You'll see my levels drawn in here. Brent, I've been watching that 50-day, and it looks like we even got the tail into the downtrend line this morning that to this point has faded a little bit. But if we could get through that downtrend line in white, that's kind of that first indication of a potential continuation of the uptrend we've been watching since April.
Yeah, more strength here in the Russell. Just looks different than the other charts. Small caps have outperformed, and that's they've done fairly well, even though the initial, for a while we had help from interest rates, I would say, in terms of the small cap front. Maybe a little less so of late, but interest rates are lower than they'd been, and just and there you can see. So that, in general, as we mentioned, I don't want to beat a dead horse because we've talked about this a lot, but lower interest rates are going to help small cap stocks, and we can see we're kind of near the bottom of this zone. It'd be nice from if you're looking for lower interest rates to kind of get below that 4 range, get out of the fours, because it's just kind of stuck in the 4 to 4.2 range, and we kind of broke above which the 4.2 range briefly, but we've kind of slipped back there. But that presumably would help the small caps even more. But small caps are doing fairly well right now, and in terms of the major indexes.
It's kind of interesting, isn't it? Because the period of time we're looking at when the yields pulled back was basically the month of February. If we go back to the Russell, we've been pulling back in basically all month in the yields, and what we've been doing with the actual Russell is just consolidating. And honestly, I think you could be you could be forgiven for believing that the Russell should have rallied already, given the significant move. But that doesn't mean it won't happen sometime in the near future, given the move we've seen in the yields. That has been a significant pullback, about 25 to 30 basis points in the 10-year yield. So we'll see if we can get that breakout, but a move and a close above the white trend line there would be a positive development for small caps. And of course, a move under the 50-day on a close would be a significant development on the downside. But ways away from seeing that happen. Now, I wanted to answer a question there. There's a good one regarding the heat map. The heat map, can it be adjusted to reflect a time period beyond just one day? Unfortunately, no. I'm putting in for that, though. I believe that would be amazing if we could see the same thing, Brent, like we get on the quotes page when we're getting the data year to date. If I could just make these same columns visually available, 20-day, 5-day, year-to-date, etc. That would be great, wouldn't it?
That is my probably number one wish on my wish list for the Thinkorswim here. So, maybe someday, can't make any promises on that, but you're not alone in asking that question or in desiring that.
Yep. Good point. Now let's see what's going on with our semis. We have a 1 3/4 rally today. Brent, that looks like a breakout. Did something is there a little bit of a whisper maybe as to what's coming from NVIDIA? Because commonly we will see this index reside at resistance in advance of such an important report. We'll have to see if that plays, but it's a legitimate intraday breakout right now, albeit when I use the term legitimate, the fact that it's intraday and not a close might make the word legitimate a little bit wrong in this instance, Brent.
Yeah, if we will have to wait and see. We're only, I don't know how far, in 20 minutes in the market, probably day or something like that. But, well, I'll tell you what, NVIDIA is up 1% today. And by the way, going back to that heat map, if you want to see and go, hey, let's look and see how tech is doing, you can do exactly what Kevin's doing there. Go to the left-hand column where it says S&P 500. You can click on IT, and it looks just at IT. And you could break it down further if you wanted to something else. But looking at IT here, you can see a lot of strength. It has Apple and AMD not doing so hot, and there's a few that aren't great. But a lot of the biggies, NVIDIA, Microsoft, Micron, Broadcom, those are all big, good performance there right now. That seems to be, now, is that driven in anticipation of NVIDIA earnings? Maybe, I don't know. We'll see. And you can see CRM there on the right, that we have earnings on that today.
Yeah.
And is Snow on there? I don't know.
Shouldn't it be in that group too? I thought for sure I would have seen that symbol in there. Should have been. Why am I not seeing it? It might be in there and I'm just not catching it, but that's where I would have expected to see it as well. Okay, one other thing here, by the way, everyone, if we're looking at it, just so you know, you do anytime you get that little box, you can always right click and do something with it. So you can add it elsewhere. You can take a move to something else. So you have a lot of opportunities within this. This tool is very well alive. So use your right click as you're working through things. Brent, let's get off of the semis. We'll go back to our charts. Let's hit up, since we're here, we're talking NVIDIA a little bit. Let's just hit NVIDIA briefly, look at the chart, see that we've also been in a lengthy sideways maneuver here. Those trend lines basically sideways in the orange and the purple, that 20 and 50. It is allowing the 200-day to get caught up. So this is a nice slope to the 200-day moving average, we would say. And then it's also important to maybe take a look at the trade page for the option contracts the end of this week. And the reason we look at this, for those of you unfamiliar, first and foremost, remember, we know options are not appropriate for all of us as investors, but we look at this to understand the expected market maker move, or based on the implied volatility. The expectation here is about a $12 move, which has increased a little bit this week, Brent, but ultimately it's in the neighborhood of 6 to 7%, which is a little light for NVIDIA in the grand scheme of things.
Yeah, I mean, it's significant. We have earnings coming up, but it is 6% isn't huge necessarily. We certainly see that in other tech companies. Maybe, I don't know, is that just a comment on how big NVIDIA is these days, or it's just a matter of what drives implied volatilities. Implied volatilities are driven by uncertainty of expected movement in the options, which are derived from the movement of the stock. So how much do we think the stock is going to move after earnings? Well, what drives a stock's movement or big movement is when our new information that comes out from earnings or something else is different than what is known information. And so that's why implied volatilities are high right before earnings, is because we have this gap between what we know and what we're about to know. That is how earnings and performance and projected earnings and growth are going to be. And the bigger that gap, the higher that implied volatility is going to be. So that's what we're looking here. And maybe there's just less uncertainty right now about NVIDIA in terms of sales or projections than there has been sometimes in the past.
Yeah, and good question in relation to the option pricing here from JV Texan. Yeah, the expectation is about a $12 move plus or minus. We don't know which direction, of course, and the truth is that is merely a calculation based on implied volatility. We know that price action can exceed or fall short of those expectations based on the actual earnings. So all it's doing is really giving traders a little bit of an insight as to the approximation of a couple of levels for consideration. It doesn't mean it's got to go that way. Of course, we know better than that, as the market is nothing with certainties. Does not give us certainties. The market gives us probabilities, not certainties. So this is just letting us know, probability for a little bit of a move here, but we can't select direction. I'm sure you had something you wanted to add, Brad. Go ahead.
I'm going to change subject. It's one that looks like you hit up in the chat, but I think it was an intriguing question. Snowflake, why it wasn't showing. Yeah, it's not in the S&P 500. It's the largest company that is not in the S&P 500.
Interesting.
But now, according to AI, it's less likely to be a candidate because it hasn't been profitable, and therefore that's one of the things that they look for admission to S&P 500. Now that's outside my area of expertise, so to speak, there, but that explains why you and I both, I think, we're kind of looking at this squinty-eyed, kind of trying to find Snowflake on there, Kevin. It wasn't there.
That's exactly why. Brent, noticed also our chatters and our viewers are wondering about the VIX falling a little bit here, noting specifically the VIX back under 20. In fact, we're under 19. Brent, is there something specific you take away from this? I mean, the volatility has been a little bit elevated, as you can see, over the last few months here. What do we take from the VIX maybe coming back under that 19, under that 20 level?
Well, I guess I would just say the VIX tends to revert back unless there's some reason for it not to. And so, and also, there's a general inverse correlation between the market and the VIX. And hey, the market's up today, particularly tech. It's up today. And when the market's going up in general, the VIX is going to go down. Doesn't always work that way, of course. And it doesn't always go the opposite. When the market's down, it doesn't mean the VIX goes up necessarily. But if you think about market performance recently, the market has struggled a little bit. And what have we seen in the last couple of weeks? The market's kind of well off its highs. It's gone down to a large extent. The VIX went up. Nice little bounce yesterday and today. What's the VIX done? The VIX has gone down. So now that takes you to the next level. Why is the market going up? I don't know exactly on that, but that would be my take on the VIX right now, I guess.
Well, I think the other, let's take it to the next logical view. If the VIX is falling, one of the key thoughts that some traders might have is that it could be positioning opportunity for long side option exposure. And what I mean by that, again, is that when the VIX is lower, your options are less juicy in price, meaning you're going to get more favorable pricing, generally speaking. When the VIX is elevated, you're going to get elevated prices in your option contracts, making it more expensive and more difficult in some cases. So one of the thoughts that is a general approach by some option traders is when the VIX is pulling back and lower, then traders feel a little more comfortable with long options because they're spending money on what are adequately priced as opposed to elevated priced options. So that's one way to think about it as well. A trader who may be looking to take a position longer run could maybe consider a lower VIX a bit more of a favorable environment in which to do so.
Absolutely.
Okay. All right, Brent, we've talked the big stuff here, right? The major indices, we hit the semis, we even looked at NVIDIA. Let's talk about the movement in asset here as we look at the 11 sectors. So we'll go back to the Market Watch tab. We've discussed the year-to-date returns in the groups, but Brent, just quickly, an eyeball on these. The year-to-date leaders are today's laggers. Not really a surprise that we're getting when we get a bounce in our laggers, suddenly our leaders on a year-to-date basis are taking a breather.
Yeah, absolutely. So it's like perfect, right? Because your columns are right next to each other, Kevin. It's like Christmas. You got red and green, and they're just basically opposite, except healthcare, I guess, is both green. But what was green is red, and what's green is red, and you can see that change. And the top one on the list there, IT, up 1.5%. That's a significant day here, and it'll be interesting to see, especially with not to beat a dead horse, or earnings after tomorrow, earnings today, but how it affects the market tomorrow in terms of IT, but. That's a biggie in the market there, but communications up about 1%. Those are the two biggest sectors, communications, IT, and those are the two best performers today. And so that's helping to drive the market. Whereas, the biggest loser today, energy, but that's the best one year to date.
So we're going to look at that, but before we do, I wanted just to answer one of the questions. I hit it up in the chat as well, but just a notification as it relates to these year-to-date return, 5-day change, 20-day change, etc. Go to your gear icon in the upper right, select Customize, and you're looking for percent change right here, okay? So there it is, percent change when you get it, or percent change since, you get it loaded, and then notice once it's loaded, you got that little caret in the lower right. This allows you to define the window. So that's what I've done is I've added in the 5-day, I've added in the 20-day and the 6-month and the year-to-date, and that's what I did here. So you can do the same. These are all loaded and now native to the platform, so we don't actually have to share scripts. That's there for you already. Okay, now let's talk about that energy move here. We have a little bit of a pullback. Brent, we've been watching the 10-day moving average on this because the speed of this move had been so aggressive. Today, we are finally, for the first time since late December, below the 10-day. Now, that doesn't mean we're going to stay below it. Let's see how that plays. But for a lot of traders who've been watching it, a close under the 10-day might mean a reasonable opportunity to take a little bit of profit off the move and see what comes from here. What are you thinking about with regard to what's happening in energy?
So we are seeing some weakness. I think a lot of this, it's not always the case, but a lot of this is driven by the price of oil right now. And oil has been, isn't always there's more of the energy than just oil, but
sure,
we've seen crude oil prices go up, and that's the graph we have. And you can see our low there was mid-December in oil, and it was very low. You may have noticed that at the gas pump.
Mm-hmm.
And it's gone up. And we've had a little pullback the last couple of days. And, obviously there's geopolitical events, tension with Iran and whatnot that can certainly drive this. The Ukraine situation can certainly drive this as well. And there's other things, OPEC and whatnot, but it seems like Iran is the biggest thing right now, I'd say. But a little pullback here on oil. I think that's what we're seeing in energy here. We've been above the 20-day on oil, and when we go to energy, we're seeing a pretty similar idea here on this, except maybe even more so.
Yeah, and perhaps the move has been speedy, maybe a little bit more aggressive than some traders would have expected. I mean, it's basically spent the year here just cruising to the upside. How about a 22.5% move year to date in a single sector that's not tech? And it's 7 weeks. I mean, that's kind of a notable move. The other thing, as I called out, the 10-day might be reason for some profit taking. Other traders might make note of the fact that we've been below the 70 line in the RSI now since about the 12th, so maybe the last 2 weeks. And I could certainly see, this is one of those scenarios where some traders utilize an RSI move from above 70 to below as a reasonable decisioning for reducing position size. Doesn't mean sell everything. You all know that. It's all about trade management, but moving to new highs, pulling back to an area, breaking short-term trend support like the 10-day could lead traders to taking a little bit off, and let's see what comes thereafter. Some of you would be more comfortable with just the 20, and we obviously haven't violated it with any effort here just yet. So depending on which way you're looking at things, you might be sitting on your hands today. You might be in an action day, but whatever the case, have a plan. Stick to the plan, right? Build your trade plan, and then plan your trade your plan, as we like to say.
Yep, and those technical indicators can be nice, kind of objective ways to insert into the plan, because you can have a plan, but if it's kind of subjective and subject to emotion, or just kind of judgment, that is more easy to mess up, I guess I would say. Whereas if you have a nice objective indicator, crosses below the 20-day or something like that, it's not, what it's doing for me is doing for you. The 20-day is a 20-day, regardless of the observer on that. And so it's easier, probably more effective in terms of rules.
Exactly that, Brent. You hit the nail on the head. We're not suggesting that one of those scenarios is a better one than another. Yeah. What we are suggesting, though, is that the trader who's ready for it, is prepared for it, and then makes a decision that doesn't come with emotion or haste. They make that decision based on legitimate concepts that they came to when their brain was working, right? And they weren't flooded with all these other hormones and emotions. They made a thoughtful decision instead of a hasty decision.
Yeah, and question in the chat from Barbara. Good question. It's double top on the RSI. Is that significant? RSI got pretty overbought there. That's just showing how strong that trend was. When you get something that moves as strongly and quickly as it did, it gets in that zone. Doesn't mean it needs to immediately reverse. It can stay up there a while, but in this case, it has come down. And so what some traders will do, they'll say, well, if it's in the overbought zone, where that doesn't necessarily mean anything, but if it crosses back out of that overbought zone down below that, that's a more significant thing. Now,
Yep.
if you're looking for a big reversal in the market, most traders aren't going to use that as the exclusive indicator for that.
Yep.
But for some traders, that would be a little bit more of a bearish signal, I would say.
Sure, a little bit, right? And James hit the nail on the head, if you ask me, and that's just that geopolitics plays such a heavy role in oil that it becomes increasingly difficult to rely on trend analysis because the narrative and the geopolitics are so substantial that you can be shocked and price action can get a shock pretty quickly without any heads up. I mean, that's what makes it difficult to trade.
Yes, and that, let me just generalize that because it's a little bit, because it's a good point. News can trump technical analysis, trends, support levels, resistance levels, stuff like that. And often the news is in the form of like an earnings report. If there's a time when a company changes trend, very often it's when earnings comes out, and that is the shock that changes things. Or if there's some news that comes out, that whatever the news is, that's unexpected, that is often an inflection point in a trend or a break of a support or a resistance level. When we go to oil, then what we're talking about is these geopolitical events is just kind of the news. They don't have earnings, but the news shocks can certainly affect those. So technical analysis definitely has limitations. It can't anticipate news, so to speak, that's truly news, and that is probably the bigger factor there.
I think so as well. And I'm because we got that future symbol up here, I want to remind you all, futures options, these trade involve substantial risk. It's not suitable for all of us as traders, and you do have to go through some steps in order to be approved and trade futures at Schwab. So make sure you do that, and of course become familiar with the disclosure statement as it relates to both futures and options. And since we're doing that, Brent, and looking at futures, let's just do this quickly, and then we'll move back into sectors here. I wanted to hit up briefly gold, which appears to have gotten its continuation move. I say that because of the recent action here just back above the 20-day and holding a little bit of what I think some traders might call a very short-term bull flag here for the last 3 days now.
Yes, short term. And you'd see that even more if you kind of went to, let's say you went to a 10-day chart or something like that. It may even be more obvious there. But you can see that. You can always change your time frames on these to help you view those. But regardless, that's, nice little short-term trend with a little bounce right off your support line there, was resistance, became support, bounced right off that. And that's kind of, from a technical standpoint, that's a bullish trend on gold right now.
It sure is. And I was thinking that maybe silver was lagging, except, well, it got itself right back above the 20-day today. So here you've got an improving group as well with a really nice candle today. So evidently, at least in terms of the pullback both of these have seen and the bounces, it looks as though bulls might be back in charge of both of these in the interim.
Yeah, lately silver has just been kind of like gold, but just more volatile, bigger moves to the high upside or the downside. And so that's what we're seeing. They're kind of going the same direction. Just silver, I suspect, probably if you measured from low to high, that we've come. If we go from high to low, it was definitely a bigger pullback than gold.
It was
that 47%.
47%. And it did it in 2 weeks, Brent. That's what's crazy.
That is crazy. So,
move.
And then, of course, when it comes back, it's come back quicker.
I said 2 weeks. It did it in a week. I mean, that was 1 day, 2 day, 3, 4, 5, 6 sessions for a peak to trough move of 47 and change. Heck of a move. Okay.
That's why, by the way, it's hard to, just say, oh, well, I'm going to get out at a certain level. Like, I'm just going to stay on top of the market. Market can move so quickly, and it's hard. And then stop losses don't always help the situation when we're talking about individual stocks. There, that's, just be aware. We're not talking about trading gold futures or silver futures here. We're just talking about the price of the commodity, but I'm just kind of extending that out to stocks. Some stocks are very volatile, and even if it's not a stock that's been historically volatile, you can say, well, I'm just going to stop in. Well, sometimes stocks can gap or something and you don't get stopped out.
Yeah, they can. They do lead to stop out trades. Remember, those stops are designed to protect us. We utilize those to build in risk management techniques, but they don't always work great because it happens to be that the execution of your stop occurs at a market price, and that can be very different from your trigger price. So, that's always a good conversation, by the way. If you're utilizing stops and maybe unfamiliar with those risks, you can always reach out and speak with a broker. We've always got somebody on the trade desk available for you 24/7. So never hesitate to do that, everybody. I think I manned those phones for a solid 16, 17 years as a broker. I'm more than happy to have those conversations with you, and our gents and gentlemen and ladies on the phone will do the same for you as well. Okay, so Brent, let's see. Our leadership today. Technology is getting that bounce. We talked about the 200-day here recently. At least I've been mentioning it. It's also coincident with some horizontal support. That's nice to see that slope to the upside. But if we're talking trend, traders want to see the break of basically the 50-day, right? I mean, it's got to get back above the 50 so that we can at least start talking continuation here.
Yeah, I think that's the clear technical pattern right now. We had an uptrend. We've kind of gone to a downtrend. And but look, that 200-day has held the whole time here. In fact, it was perfect. It bounced right off that. Yep. And so it's almost kind of like this triangle. Which way are we going to break out of this? Which is going to give first? Our 200-day or our 50-day? We'll see, but I think traders either way would take it either as bullish or bearish, depending on which way it breaks.
Yep. And obviously tonight is going to tell us quite a bit. Yep. We've seen that the inverse relationship, the inverse correlation today. So shouldn't be at all surprised to see utilities taking a little bit of a breather. Brent, these are at all-time levels, by the way. Attempted a breakout yesterday, finished at a new high, made a new intraday high today. What are you going to say? It's a good bullish move in utilities. This is a proper spot for a bit of a breather, though.
Yeah, and I think that going back to our VIX conversation earlier, when the market was a little bit more jittery, VIX was high, kind of elevated, utilities went up. That's more of a safe, I hate to use the word safe, but perceived to be a flight to safety type thing there in this case. And of course, VIX is down today. People are feeling more confident, maybe a little bit in the market. Maybe some money is just shifting out of utilities to more risky, what are considered to be more risky sectors.
Or maybe not just risky, but those that have been really lagging. I mean, look at financials. Financials is off pretty aggressively here. You are getting a bounce today, but it's not exactly a bounce that's going to make bulls feel great just yet, right? I mean, it's nice that we're through the high of yesterday, if yesterday's our low day. But that basically means we need a full range day today with a nice, beautiful candle that holds the low we've already set today.
Yes, and even that is just a lower low that we've hit. It's not a breaking trend. We're not breaking through a higher high here. I guess it could happen, but it's unlikely we're going to get that in the next day or two.
Yeah. And note the 20-day here, everybody. I'll lift my manually drawn line, but we fell through the 20 back here in January on the 12th, and then we made a lower low in the short term. Rallied into the confluence of the 20 and the 50. You were above it for 2 days. Maybe some semblance of confirmation there that did not occur, so you didn't get a so-called Horner rule, right? You didn't get more than enough days above the moving average to validate it, whatever that is for you. For some of you, it's 1 day above it. Others, it might be 3 consecutive, 4 consecutive, etc. But we didn't get it. We were there for 2 days and right back down. And then another bounce, didn't even get to the 20-day on this one, and again rolled over. So if you're watching the trend, the expectation might be, yeah, I think there's entirely a reason. Many a trader will say there's a good reason for an expectation for a relief bounce. But there's also the expectation that a relief bounce into the 20-day is apt to be sold, much like it has been, Brent, over the last 3 months here.
Yeah, absolutely. And I know we are right about at time here, Kevin, but just want to mention, hey, everybody, we're on X. Kevin's on X. Barb is on X. I'm on X. At Barb Armstrong CS, at Kevin Horner CS, at Brent Moore's CS. And it'll be interesting, Kev, to see how Snowflake and CRM, Salesforce, and NVIDIA do after the market closed today, and how that affects the markets tomorrow.
It's going to be a day tomorrow. We know that. Inevitably, I'm going to be on an airplane heading my way to California, so I will be missing some of the open at least. It could be, but maybe tonight we'll foreshadow how tomorrow morning may go. But yeah, absolutely. Brent said it all. Thanks for being here, everybody. Follow us on X. If you liked our conversation, we'd appreciate a thumbs up down below. We're going to get this archived and ready to go for you all in a couple of hours here. But we always appreciate hearing from you. So thanks for participating. Big thanks to Barb in the chat. Barb, I'll see you in San Diego in the next day or two. And the rest of you, if you are coming out to visit for the market drive, stop by, shake a hand, introduce yourself, let me know what you think of the classes, etc. We'd love to see you. So with that, have a great rest of your Wednesday, everybody. We look forward to seeing you again real soon.